In today's video, we're going to crunch some numbers, do some math. So I'm Juan Pablo, the founder and CEO of Multifamily Done For You. Let's jump into it. So you might be thinking, what kind of math? I want to give you some realistic numbers of what we're seeing in today's market in terms of your goals of a certain amount of passive income, how many units you can get, the cost of those things, etc. Now just keep in mind, I'm sharing with you details about the markets that we invest in at the time of this recording. All right. So based on when you see this video, right, or based on what market you choose to invest in, the numbers may be different than your expectations. Okay. But I'm just using this as a training exercise so you can get an idea of what to expect. If you're wondering what's up behind me, just some toys for my young kids. All right. Now you see it, now you don't. All right, let's jump into it. So let's say, like most of our investors, right? One of their goals is to receive $10,000 a month passive. And when I say passive, I'm talking about all income received minus all operating expenses, insurance, taxes, property management fees, utility bills, reserves for vacancies and maintenance, and even the debt service. All costs considered. Profit in their pocket, passive income, 10K, right? 5 figures a month. All right, now what we're going to do together is pull out your calculator or the app on your phone, and we're going to crunch some numbers. All right, so let's say you want $10,000 a month passive, and what we're seeing is the average cash flow per door to be around $200 to $300 a unit. Now this is multifamily. I know you might be thinking, well, in my market for single family, I'm getting about $1,000. Well, great job. Continue to invest. If it ain't broke, don't fix it, right? But in terms of scaling, it may be challenging for you to continue to buy a ton of single families because the price points might be $500,000, right? $400,000, $250,000, just for one unit, just for one door, right? So what you have to factor into that equation is not just how much immediate cash flow you get from one single family. You also have to factor in the scalability of it, the repeatability of it. Right, so that way you can get to 10,000 a lot faster. So let's crunch that number. So let's take 10,000. That's your desired passive income. Let's go with the midpoint between $200 cash flow and 300. So 250. So let's say 10,000 divided by 250 comes out to 40. What does that represent? 40 doors. So that means for some, you need 40 doors, units in your portfolio to obtain $10,000 a month of passive income. Now, with me and my personal journey, before I turned in my 2 weeks notice, when I did the math personally, I needed around the same. I think it was like 40 or something. It was a long time ago, you know, when I was 30 years old. Before I was 30 years old, this was in my 20s. And as I started buying properties left and right, of course, you know, being an operator, I would buy one deal, I would make it perform better by increasing rent, decreasing costs, and then I would grow better in my negotiation skills. I might get the second deal at a steeper discount, or I might be able to increase income this way, decrease costs this way. So it was more of a flywheel, right? To the point where by the time I was 30 years old, I didn't need the 40 so odd units that I thought I needed to achieve my financial freedom goal. I just needed 30 at the time, right? And as I was, you know, buying more and more properties and units, etc., making them perform better, I too was taking a look at my personal expenses to see how I can drive my costs down, right? Meaning, let's say my personal living expenses was $10,000 a month, to see how I can get that number down to $8,000, right? Maybe I can pay down debt here on my personal credit card. Maybe I can do this. So I burned the candlesticks from both ends. One, how can I increase my passive income? And two, how can I reduce my personal living expenses, right? And in the middle, I was buying properties left and right. All right, so we just did the math, right? You need about 40 doors. So you might be thinking, wow, 40 doors. Well, how much is it going to cost me? All right, well, great question. What we're seeing in our market, at the time of this recording, we're seeing the cost per door to be somewhere around 30,000 to 50, 55,000. I know it's a range. It just depends on where you buy and the square footage, the number of bedrooms and bath, you know, how updated, how recent the building is. So a lot of these things play into factors. So that's why I'm giving you a range. So what we're seeing again is 30,000 to around 50,000. So let's go with 40,000 as the midpoint, okay? So if you need 40 doors, and let's say you're investing in one of our markets using our system, you're acquiring each door at 40,000 a pop. So you just, in your calculator, take 40 times 40,000. That equates to $1.6 million. So that means you have to buy $1.6 million worth of properties. Now, that doesn't mean that 1.6 million has to be cash in the bank. If you got it, great. Go ahead and buy them bad boys cash, right? But if you want to use leverage, you can in this scenario. So let's say you're using leverage. So depending on what you qualify for and what we negotiate on the deal, you can negotiate in terms of your purchasing power, how much of a property you can afford to purchase, to bring down a 10% to 20% down payment. Sometimes at the top end, even 25%, right? With some commercial mortgages, right? Just depending on the loan to value, what they require. So anywhere between 10, 20%. So let's calculate on the high end first. So let's say 20%. So you take your 1.6 times 0.2 in your calculator, you get 320,000, right? Now you might say, man, that's still enough. That's still a lot, man. I still don't have enough. That's cool, right? There's many ways of knocking this down. It's just like the old proverb, right? How do you end up eating an elephant or whatever it is? You know, one bite at a time, right? You do one deal at a time, and we use that's what I said about increasing rents, decreasing costs, because you're forcing appreciation, in which you pull out that appreciation and use that to buy the next deal, right? So it's not just about having one tool in your arsenal, you know, just using your savings. No, it's about having multiple ways to fund or finance your deals. Case in point, using the equity that you've established in that property, pull it out to buy number two. But let's say, going back to this math, 20% down, that's 320K. Now let's go back to a 10% down payment, right? Going back to one of the financing tools that you can leverage in your tool belt. One of them could be seller financing. The other one could be partnerships. There's many other ways, right? So let's say you were able to bring a partner, or you were able to negotiate seller financing, whatever it was. Let's go back to that 1.6 million times 10%. Let's say you only had to bring 10% down because you had a partner to bring the other 10%, or you had the seller agree to seller finance for 10%. That's 160,000, right? So that seems more achievable, right? And what you want to do is give yourself a game plan as acquiring them. So I don't want you to think microwave, right? Just getting all these results overnight, which is great. But hey, in my journey, it took me 4 years to achieve that goal. And I was working in New York City. And at the start of my career, entry level, I was making $39,000 a year salary. And that's little in New York. Some of you guys are from New York, or at least been there. You know, the price point of real estate is through the roof, you know, pun intended. So 39K is not enough. But towards the end of my career, I was making around 83, I think it was, 83 or 88K. Because not only did I work hard off the clock with my real estate holdings, I also worked hard on the clock in terms of my career. I definitely bust my hump, you know, so that way I can prove myself, because my name is associated, right? So I want to have a reputable name, you know, good name is better than silver and gold. And so I worked hard, and I just got promotion after promotion after promotion, pretty much double my salary, you know, while working there for 6.5 years. But that's besides the point. But basically, I just want to share with you the purchasing power, right? If your goal is $10,000 a month of passive income, that means you need around 40 doors, which means you need to buy properties upwards of $1.6 million, which means you can do a down payment in the range of $160,000 to $320,000. Okay, so let's do the midpoint. Let's take 160 plus 320,000, 160,000 plus 320,000 is the purchase price, and divide by 240K. Okay. Now with that 240K, you might say, well, hey, I don't have 240K, but hey, you may have 30. You may have 40, you may have 50. What's really needed is just the first step. Going back to another proverb, you know, the journey of 1,000 miles begins with just one single step. The first step you need is a discovery call. You need to hop on the phone with us, so that way we can see if we're a good fit for you and you're a good fit for us. And we can crunch the math together to see what your purchasing power truly is. What is your financial freedom number? How many units you need to acquire and the cash flow per door? Because it could be different for you, whether it's in your market or in another market that has better returns, more affordable, but also safe, and appreciates, landlord friendly. So we have to crunch all those numbers. So if that's you, and you want to take that first step, you want to take that first bite out of this elephant so that way you can start moving forward towards your goals, book a discovery call, all right? And hey, you don't have to do anything I share in this video. All I share is this. Just keep coming back. Watch our videos, become an informed decision maker until you get that confidence that you can proceed and buy your first multifamily deal. All right, so I'm JP, Juan Pablo. As always, to your success, continue to earn passively, live passionately. Peace.